Happy New Year. This is the second week in the new year, and we're all excited. There's never been so much anticipation for any ETF. The potential launch of an ETF, no matter whether you look back at the pre-launch sentiment for the landmark ETF, for the S&P 500, for gold, for oil. There's never been anything like what is happening with the sentiment for the upcoming possible launch of Bitcoin spot ETFs, and especially the BlackRock one. I mean, to the point where you go on mainstream media like Bloomberg and you hear discussions with technicalities around ETFs. The stuff that happens behind the scenes, how ETFs work. We are hearing more about the authorized participants that have been approved by BlackRock. Hooray! We've never heard, nobody knows who's the authorized participant for the Spider ETF, the biggest ETF of all time. Why is this happening? This is happening because there's so much anticipation around whether there's going to be a regulatory approval. And of course, from a market and investor perspective, yes, you should care about who's the authorized participant. Why? Because they play a very important role in creating a robust and liquid ETF. And let me explain in simple words, what is the role of authorized participants? They are typically entities that have a broker-dealer license. And what they do is they acquire the underlying asset of the ETF. In this case, it would be Bitcoin, and exchange Bitcoin for shares of the ETF from the issuer. So let's take, for example, JP Morgan or Jane Street that are already approved authorized participants for the ETF by BlackRock. They would be the ones needing to have the capital to buy Bitcoin, exchange it for the BlackRock ETF shares in a way that it keeps the ETF price in line with the underlying value of the Bitcoin. And conversely, if there's selling pressure for the ETF shares, then there would be an oversupply of the Bitcoin spot ETF shares, and the authorized participant would have to redeem these shares and sell the underlying asset to keep the price of the ETF in track with the underlying. Authorized participants need to be not only capable in terms of having sufficient capital to serve this role, but in this case of the Bitcoin spot ETF, they need to have the infrastructure, the technology, if you want, for crypto trading to support this creation and redemption role that they have. So I consider the choice of Jane Street and JP Morgan as a strong signal for the market, and it gives us the confidence that should it be approved by the regulators, it will be a robust and liquid ETF. Of course, there's an irony in both of these entities. Needless to say that JP Morgan, Jamie Dimon, the 18-year-old CEO, very successful CEO, has repeatedly bashed cryptocurrencies and Bitcoin with his latest comments in a congressional hearing of all places, stating that if he was the government, he would ban cryptocurrencies and Bitcoin. And here we are, JP Morgan being one of the first authorized participants, Goldman Sachs is also applying, if you want, or aspiring to be maybe the third authorized participant once it's approved. The irony with Jane Street is that, Jane Street is a very well-known quant firm and liquidity provider. They have been very much involved in crypto trading as a market maker. So they have the capital, they have the infrastructure. But the irony is that in early spring in 2023, around May, they announced that they would be reducing their market making activities in the crypto space due to the regulatory uncertainty. So there's the irony. All in all, I would say that BlackRock's selection of these seasoned and reputable entities as partners is a great signal. It's encouraging, clearly, towards the launch of this ETF product. Of course, everything depends on the regulatory approval and whether these authorized participants can deliver on their commitments. The day is close and we will know whether they will get to play their role.